So hi guys, welcome back to my channel. Today we'll be dealing with investment accounting. So first I thought let me get into the concept field and then solve the problems so that you will get more confident in the concept area and solve any type of problems even if I'm not doing any of the problem. So let's start with a video. Investment accounting. So what are investments? See, investments are the assets which is held by the enterprise. Investments are asset. So where do you find the investment? In the balance sheet and the asset side of the balance sheet you will find the investment. So investments are the assets. You came to know investments are the asset, then which is held by the enterprise. Okay, this is the important point, which is held by the enterprise. For what? For earning the income. Through how do you earn the income? Through dividends, interest and rentals. So after you earn all this, what it leads to? It leads for capital appreciation and other benefits. Okay, these are investment but excludes the operating of financial leases. Why do you exclude the operating of financial leases? Because you're investing the assets which are used in the production. So all the production and which is used by the enterprise but for production will not come under this. So you are excluding this. Next, for retiring benefit and life insurance, you are excluding this because it is of a personal use and not for the enterprise. So you are excluding this, and mutual funds too. Next, assets which is held as a stock in trade. Okay, stock in trade, it relates to the sales and purchases, but you're not dealing with the investment. So your assets which is held as a stock in trade will not come under this investment part. Now, according to AS 13, investments are classified like this. Classification of investments as per AS 13. Investments are classified into two types: current investments and long-term investment. What are current investments? Current investments are those which are readily realizable and which is held not more than 1 year. That means whichever are the investments which is held less than a year is less than or equal to 1 year are called as current investments. But long term investments are those investments which are other than the current investments and which are those which are held more than a year. Okay, next, initial recognition, subsequent recognition. Okay, whenever you are answering for AS questions, that is theoretical questions, you need to write this. Initially, how do you recognize? Initially, let it be a current investment or a long-term investment, you will initially recognize it at cost. Next, after subsequent recognition, further, how do you recognize it? Okay, cost or fair value, whichever is less. Here in the long term, how do you recognize it? In the further, cost less provision for permanent diminution. Suppose there is one investment and there is a permanent diminution in that. There is a complete permanent reduction in the share value. Then how do you do that? So cost less those provisions which led to permanent diminution, you will get the subsequent recognition value. So this is how the classification according to the AS 13. Now we are dealing with the investment on the basis of income. So investment is divided into two types on the basis of income, that is fixed income bearing scripts and variable income bearing scripts. You'll get problems on both the methods. Comparable to variable income bearing scripts, fixed income bearing scripts are problems are very easy. Now we'll see what is fixed income bearing scripts. When the return of income is fixed, then it is called as a fixed income bearing scripts. Okay, like debentures, 9% debentures, 10% debentures, and any bonds, 9% bonds, government securities. So there you will get a fixed percentage of interest on the invested amount, so that you called it as a fixed income bearing scripts. Variable income bearing scripts, when the return of income is variable, that is, example, you are having a equity share and you don't know when the dividend is being announced, or if announced, when it is going to be received or something like that. Like, you will not get the income on the fixed basis. Just you will be getting the income on the basis of whenever the dividend is announced, then you get. So it will be variable and not be fixed. Sometimes you can get the dividend, sometimes you cannot get the dividend. It is not fixed, so hence it is called as a variable income bearing scripts. Example for this is equity shares. And fixed income bearing scripts follows the accrual concept method. Whether interest or the income which is received on the fixed basis is, whether it is received or not, it it just calculates and records the matters on the basis of accrual concept. Whether or not the receipt is received, it will calculate and it will mention in the accounts, but it does not follow the accrual concept. Why? Because so example, in our example we saw that dividends are not sure when it is going to be announced. Hence here accrual concept is not followed. We'll just go deep into fixed income bearing scripts for the first, and next we'll go to variable income bearing scripts. Here, the return of income is fixed. That is, interest, you will get the interest on due dates. Whether or not interest is received, you will record it. Okay, and it is based on the accrual concept. Next, interest can be of two types: ex interest basis and cum interest basis. See, ex interest basis is interest is not included in the cost. If it is a cost will include all the brokerage, taxes, duties, fees, etc. Only that cost will be there, and interest element is not included. That's why it is called as ex interest basis. Then coming to cum interest basis, interest is included in the cost. If interest is included in the cost, then it is called as cum interest basis. So x interest plus interest is added, which leads to cum interest basis. Whenever you're purchasing, purchase cost plus brokerage, you need to add all the things like purchase cost plus brokerage plus tax plus fines and duties. But whenever you're selling, you need to reduce the selling price minus brokerage minus taxes minus fines. Okay, the trick is to, whenever you're purchasing, you add the other charges or other expenses. Whenever you're selling, you deduct all the expenses to get the cost. As I told you, ex interest plus accrued interest is called as a cum interest. Now, what is this accrued interest? Suppose, take an example. Now, there's a company and it was issuing the debentures. Okay, and the due dates for the interest is 30th June and 31st December. Okay, now a person who is holding, see this example, Pintu. Okay, Pintu is a purchaser, Chintu is a seller. Now Chintu is having the debentures with him. Okay, and he is gonna sell those investments to Pintu. Okay, now as per this, Chintu is selling. Chintu is selling on the 1st of the March. So now, as I told, that fixed income bearing scripts will always include the accrued interest. What is that accrued interest means? From the last due date, that is 31st December or 1st of the Jan, to the date of sale, whatever the interest has been accumulated, okay, that month's interest shall be called as the accrued interest. Okay, for example, if the face value of the debenture was 1 lakh, okay, I think you can see 1 lakh, and interest is of the 10% into 10%. So you get the interest. This interest is for the whole year. Now you need to calculate accrued interest. Accrued interest is the interest which has been accrued during the last due date and till the date of purchase or sale. Now from 1st January, to 1st March, what is the interest which has been hidden here is for the 2 months interest. So hence 10,000 is for the whole year, and into 2 divided by 12 will give us the interest of the 2 months 2 months interest. Okay, so we need to consider this interest plus the x interest price, so that we will get the cum interest. Now I think you have understood the accrued interest concept. The next part is brokerage. So this brokerage will be like, it is of two chances are there. First is they'll be giving in the question itself whether brokerage is calculated on the x interest price 1%, brokerage is calculated at 2% on the come interest price. So if they have given, please do like that. And when they have not given the question, how do you calculate? If you have purchased a scrip on the basis of come interest price, then calculate brokerage on the come interest price. If you have taken the purchased or sold scrip on the basis of the x interest price, then take it and then calculate the brokerage on the x interest price itself. And whenever you are purchasing it, you need to add the brokerage. Whenever you are selling it, you need to deduct the brokerage. This is the format which you need to be very clear whenever there is any purchase or sales in the investment account. When you're purchasing, there is lot of issues, like to clear that this format is there. So first thing is you need to write it in the same manner because of some calculations. Okay, date, face value, from, to, number of months, x interest, interest, come interest, brokerage, and net of brokerage. Date, on the date which you have purchased or sold. Okay, then face value, face value will be given in the question. From what date? This will be the last due date to date of purchase. Then how many months are there between these? Okay, those months. Then calculate interest. Interest will be calculated always on the face value. Okay, some percentage will be given in the question, and calculate the interest on the face value. Write the interest here. Then now come interest will be there. If you have purchased and they have given a you have purchased on the come interest price, write the come interest price. If you have purchased on the x interest price, write the interest price. Now one of the thing will be missing, either x interest will be missing or the come interest will be missing. Interest will be there. If they have given x interest price, okay, and you have calculated interest, add it and write the come interest price. If they have given come interest price, deduct the interest and write the x interest price. Next, brokerage. I discussed about the brokerage, and that will be written here. Next, if you have purchase, in the case of purchase, how do you need to write the net of brokerage? Okay, so always x interest price, x interest 6, number 6. Okay, this x interest plus the brokerage what you have calculated should be added to get the net of brokerage. Whenever you are selling it, x interest minus brokerage shall be taken into consideration as a net of brokerage. So this format you need to prepare well for the format so that you could not miss any of the calculations. Okay, next we are moving on to journal entries. Journal entries in the books of dash and dash for the year ending, and for the year ending you can write the dates. Now, journal entries, whenever you are purchasing an investment, you will also purchase it through the accrued interest. Like in last example we saw that a investment is an asset, all the asset will be having a debit balance, thereby you are debiting the investment account, and interest on investment account is a accrued interest. So interest which is outstanding or accrued will also have a debit balance, you are debiting that. Now cash is going out when you're purchasing an investment. What the real account says, debit. Now real account deals with the cash, bank, and business related things. Debit what comes in, credit what goes out. Cash is going out, so credit the bank account. Next, in the case of sale, bank account, your debit what comes in, debit what comes in. Okay, so cash is coming in, so you're writing as a bank account debit, and this will be of the come interest minus brokerage. I already told you, if it is of the purchase, then you need to add those come interest plus brokerage. If it is of the sale, come interest minus brokerage. Next, 2. you are selling it, I mean asset is getting deducted as asset balance is coming down, so you are crediting it. Interest on investment, accrued interest, you have received it, so it is coming down and you are crediting those. And here the interest calculation, okay, last due date till date of transaction. If it is the date of transaction, if it is of the purchase, then date of the purchase. If it is of the sale, date of sale. Whenever you are receiving interest from last due date to this due date, bank account debit to interest on investment account. Okay, next, profit on sale of the investment. If you're getting profit, always investment account debit to P&L account. If you're getting loss, P&L account debit to investment account. Then some points which are to be noted. If when you're preparing an investment account and the opening due date, and if you're having a opening balance and the due date of that and year end is not matching, then you need to debit the accrued interest in the interest column of the opening balance. If you are having a closing balance and the due date of that and year end is not matching, then the accrued interest should be credited in the interest column of closing balance account. Okay, then if there are different, I can say, like, if they are having different kinds of bonds and scripts, then you need to open separate accounts for each of the investment made. Then whenever you're preparing investment account, you will be dealing with two types of accounts: investment account and interest account. Always investment account will be having debit balance, interest account will be having credit balance. Always credit balance will be higher in the case of interest, and you will get the profit on interest account always. Next, interest will be always calculated on the face value. Now you can say that yes, I know, but while solving the problems, you will calculate it on some other amount, that is on the come interest price or ex interest price. No, always interest should be calculated on the face value and not on anything. So this you need to stress at this point. So this also I explained, but still again I'll tell you. Okay, interest you will calculate it on the face value. That interest, if you have calculated the interest and in the question they have given a come interest price, then from this come interest price less the interest, then you will get the ex interest price. If they have given the ex interest price, then add the interest and you will get the come interest price. Next, whenever you're purchasing, selling, or writing the opening or closing balances, then only write in the amount column and the face value column. I'll show it in the next page. You are going to get an investment account format, then I will show you this. Okay, what it is telling is, whenever you're doing these four things, then only you need to write in the amount and face value column and not in the interest column. Okay, next, always interest in the credit side will be higher, so interest balance will be higher in the credit side of the investment account. Next, face value column should never be tallied. Okay, always the face value column in the investment account should not be tallied. Then interest column will always have a profit, so interest column will always have a profit. Now we'll see how those points are explained practically. As I told you, this is the investment account, so you need to be very particular in writing the format, and thereby you fetch more of the marks. So write in the books of a dash. Next, investment account, then the scripts are nothing but instrument. So 9% debentures, equity shares, like that. Then you're having debit and credit side, date particulars, face value, interest and amount column, date particulars, face value, interest and amount column. You're writing opening balances here in the face value and amount column and not in the interest column. You will write in the interest column only when you get the interest. Okay, now same thing here in the closing balances also, face value and amount column. Next, if when the due date is not equal to year end, I told you need to write the interest receivable, so to interest receivable only in the interest column. And here also, if closing balance is not equal to closing balance is there and the due date of that and year end is not matching, then you need to write by interest receivable. Okay, next, when you purchase in investment account data to cash or bank account, okay, and interest is calculated here, you will write the face value. Face value will be always given in the question, and whenever, and using the other format which I have shown you, you will be calculating the x interest and the interest, and you're writing the x interest here and accrued interest here. You will never ever write come interest in this investment account, only x interest in the amount column and interest in the accrued interest column. Next, whenever you're selling it by bank account, and all the three, face value and the amount which you have calculated, that is x interest then interest. Okay, then this is also due date, last or due date to date of sale. Next is, whenever you are receiving interest by bank account, this is of receiving normal interest. This is, you're writing it as accrued interest, this is a normal interest. Last due date to this due date, you're writing here. Okay, next, then whenever you are selling, okay, you are selling, you get a profit, then you will write here in the debit side and write only in the amount column, only in the amount column. If you get the loss, then write in the amount column in the credit side. Okay, and always as I told you, interest column will have a profit, and this profit will be in the debit side of the investment account, and there will be a balancing figure, that will be the profit. And also this face value column should not be tallied at any cost. Then the last concept of this the thing is reclassification of investment. When you are reclassifying the investment as from current to long term investment, then you need to consider the cost and cost or fair value, whichever is less on the date of transfer. Okay, whenever you are reclassifying long term into current, cost or carrying amount, whichever is less on the date of transaction. Okay, I think this much concept will be enough for doing the questions of fixed income bearing scripts. I will meet you in the next session with the problems of fixed bearing scripts. Until then, bye bye. Please subscribe to my channel and comment in the comment section how do you feel about my videos. Subscribe to my channel, like and share to everyone. Thank you. Please check in the description box for the other videos which I've posted earlier.